Okay, jocks, this is the 1 hour chart for the dollar yen. The 1 hour chart for the dollar yen. And you already know that the white vertical lines represent period separators that separate the beginning and end of each trading day. Now, to begin, let us focus on this bar here, the February 21st bar, the opening range. And if we draw our lines here, we take the first bar, the 1 hour bar that opens the trading day, and so we draw our line at the high. We draw our line at the high of the bar, and we also draw our line at the low of the bar. Okay, now we have our lines. Now at the beginning of each trading day, this first 1 hour bar, the high and the low, is support and resistance for that particular day, for the beginning of the day. Now, it's not actual support and resistance, but it is another form of psychological support and resistance. And as we go forward, we'll understand better why that is. But now, if you notice this second bar here, this bar closed above the high of the opening range bar. Now, what does that tell us? That tells us this, that if we're going to enter a trade, we want to enter long, because this is a long breakout. If price falls and closes below the low of the opening range bar, that is a bearish breakout to start the day. And most days, I would say 7 or 8 times out of 10, the market will establish the open range and will actually respect that open range. And in a nutshell, to make a long story short, you only want to buy when market is above the opening range, and you only want to sell short when the market is below the opening range. Now, when we're trading the opening range, we want to approach the trade the same way we approach breakout trading. Okay, the same way we would approach the trading of the breakout of a high or low. And in that regard, when this bar broke above the opening range and closed above the high of the opening range, now that is a buy signal. However, if we look down, we'll see that indeed it did close up on higher volume. So now, where would we enter? Now, this is the thing. Many traders are familiar with the opening range, but recognition and the trading of a setup are two different skills and two different knowledge bases. I mean, many of us can look at this and say, okay, this is a bullish breakout, but where do we enter? Okay, well, the entry is and most times I've found that it respects if it's an up bar, it will come back to the real body and then go back up. Now, when we look at this example here, once price closed above the high of our opening range, we want to place our buy order at the beginning of the real body here. And we can see here price came down, tested the real body here, price came down here, tested the real body again, and did not close below it. So the long is still intact, and this bar here, as we can see, stayed above the opening range, and we stayed above the opening range here, and we're still above the opening range here. And now, even at the close of this bar, we're still above the opening range. Now, if we entered on the pullback to the opening range, the opening 1 hour bar, where would we place our stop? And knowing you, jocks, you're probably already one step ahead of me, and you know that your stop will go below the low of the opening range, since that is the range that we are focusing on. If price should fall below here, we want to get out, and if price should close below here, then that is a definite short signal. So a close above the high is a long signal, and a close below the low is a short signal. And as we get into this discussion further, we will understand how within the opening range, how our other rules apply as far as footsteps and single bar support and resistance. Nothing too complicated, nothing more than what you already know, but just how we specifically apply it to the opening range. And you have to excuse me, jocks, I'm still recovering, so I have to cough every now and then. But I'm running out of time in this segment, so in the next segment 2, we'll pick up where we left off here with the 1 hour opening range.